Hello guys, hope I come on time this time. It's 11:03 and everything is looking good as I can see. So I will be waiting just for uh, my friends to come and we can begin our session for today. So the subject of today will be how to trade IPOs, and I hope you have an idea about them. So we try just to go into details and I will explain more. Okay, so Amman Khawari. Hey, how are you, Amman Khawari? How are you? Where I am from? I am from USA. And how about you? Hello, Vincent. Good evening. You are on time always. Thank you for coming. Cool. Yes. Yes, Amen. Where are you from? Hello, AK Shubang. Hey, how are you? Aman, you are from New Zealand. Oh, that's good. That's good. that's excellent. Um, so so I will be just waiting for just 1 minute or two or a few minutes until I get some people, and then we begin to speak about our subject, which is hello Shubang. I am fine. Thank you very much. Thank you. And we will begin our session. So I see 5 guys watching. So we will just wait a little bit and then we can begin. I know that most of you, maybe you have an idea about IPOs, which is initial public offering. Thank you very much. Thank you very much, Shubang. He said your videos are very helpful to me as a beginner. Yes, thank you very much. You know, most of my videos are for beginners, and some of them are for intermediate, and then some of them are for advanced students who have been or traders who have been trading for long or investing for long. And KMSCMB say why Saturdays nights? It's just because here in USA most of the people are free or available on Saturdays. Most of the time Fridays they go out, they have parties or they go out or with friends. So Saturday nights is my best night because there I can see all my guys. I can't do it on Sunday nights because the people work on Monday. So I can't do it at night and the people are going to work in the morning. Okay, it's not good. But whatever time I put, it's good for people, for some people, and it's bad for some people. So, and this is just a way to be with my friends or my students or whatever people comes. It's for us here in America. It's the best time. For others, I don't know. Or the whole world, I have no idea. Yes. There is a question from Vincent. He said, "Can you explain more about limit order? Sometimes I get frustrated when my price don't get filled, so I use market order. Is that okay?" Yes, you can use market order. They give you, if your broker is good And market order, it means they give you whatever price right now. For if you want to put a limit order, you can add 1 cent, for example. For example, the ask, let's say the ask is $10, 1 cent. Okay? If you want to buy and not to be a problem, put $10 and 2 cents. Just an example. But understand that the market will give you what is there. But sometimes if you choose a stock that it is moving so fast, sometimes it's a problem because you will be chasing this stock. For me, it doesn't matter, okay? Because whenever you buy it, let's say, here I give you an example. Let's say you buy the stock at 3:30. From 3:30 to 4 o'clock, the stock can go up or go down. So it's the same. So don't worry a lot about, don't be frustrated to buy, because for us, we are not day traders. 1 cent or 2 or 3 more or less, it doesn't make any sense. Sometimes I bought a stock, it goes $1 from 3:30 to 4 o'clock, it goes to $1. So I see hundreds of dollars that I don't expect. Okay? It can also, you can see some dollars, so you lose some dollars. It's just because you buy early or late. So don't be frustrated. It means just buy with whatever the price, put stop loss, close your account. It means, and your work is done. Don't worry about anything else. So this is about Vincent. He said, KSMTNB care, he say party animal. No man, it's not a party animal. It's a human party. People, they see each other, okay? They are friends. If you are living alone and you don't go to anyone and no one comes to you, it's your problem. So it's people, you know, how the people they live. Each one lives the way he wants in his life. If you have friends, you have friends. If you don't have friends, you don't have friends. So it's your own life. So no one will mess up with your life. Wise man, how are you, wise man? Good evening. What topic will your next set of the lessons will be? Okay, for today, we try to see the IPOs. Now, IPOs is what we call initial public offering. I will explain. Some of you already know what is an IPO, others they don't. So we try to initial. Sorry, I forgot the T. Initial with T. Okay. Here is the deal. I'm speaking here about USA. Other stock market in the world, they do the same. It means there are two kinds of companies. One is called private. The other one is called public. What is the difference? If your company you want to buy is in the stock market, this is called public. If you want to buy shares from a company and it is not in the stock market, it means that it is private. Private, you can't buy shares from them. Okay, so it's like I will give you an example. Let's say your friend has a big, nice restaurant. It works good. It is in a good place. Hundreds of people, they come, and you know that your friend is making a lot of money from this restaurant and it is working good. Okay? Then you have the idea, you have something like you have 50,000 or you have 100,000, and you save this money for 10 years or 20 years, and you want to do something with it. You want to do a business, but you don't know, okay? So you go to your friend and you tell him, oh, okay, my friend, I have $100,000. I want to be your partner in your business. Now, most of the people, they don't like to be partners when they are successful. This is life. Okay? Because if you be partner with him, for example, you ask him how much money he spent all in his company. Let's say he spent $200,000. You tell your friend, I will give you $100,000 and I own half of your restaurant. So, whatever money comes, we should divide it in the future. Most of the people, private, it means he has his own restaurant. If he is successful, believe me, he will never let you in his company. That's because people, when they begin doing business and they are struggling, no one helps them. Believe me. Okay? If you, for example, you want to do your friend, let's say your friend, he has no knowledge about restaurants, or he just worked a little bit in restaurant, he has no knowledge, and he has $100,000, and he needs another $100,000 to have the store, the restaurant, to begin buying the machines, buying the vessels, buying everything, and he wants to have some people who are helping him, and he begin to run. Now for you, most of the time, you will never help him. This is part of life. Now why you don't help him? It's just because you see a big risk. You see this guy has never run a restaurant. His experience is small. How can I give him $100,000? What if he loses all the money and he is not that serious? Okay? So do you see my idea? It means that most of the people, they go to successful people and they want to partner with them. They don't want to partner with losers or with some people who have less experience, and that's it. Okay, let's see what's hello Mr. Hahna. I don't know how to pronounce this. Hello Abkarim, I am a new silver subscription. Do you stream each Saturday? If so, from time to what time? Thank you. Okay, this live session is not for subscribers, or it is not for my only my students. It is a general session. It's a YouTube session. It's very general. I don't give information about my training here. I don't explain training here. But it is always on Saturdays from 11 p.m. Eastern time, like New York time, 11 p.m. Eastern time, each Saturday. Okay? And you can, Mr. Handa, you can send me an email if you forgot or something, but it's always on 11 p.m. Okay? So, as I told you before, in terms of business, people always, thank you very much, people always tend to help the successful, but not to help the one who needs help. This is life, and this is how the people see business. Okay? So if you, as I told you before, if you have a friend that he has a successful restaurant, and you are eager to help and to divide his company into two, and you own half, and then you begin to see the money, because what interests you, it's not your friend, it's not his business, but you see that he is successful. He is making money from his business, and this is what attracts to him. But if he tells you, I am going to make a restaurant, a new restaurant, and he has no restaurants before, he has no experience, I think that you will not help him, and I think that you will never do business with him. Okay, this is a part of life that everybody knows. Now, this small company is called private because you will never know the financials. It means it is a small company. You don't know the financials. It means You don't know how much they make, how much the workers make, how big is this company, or everything about the money. It is hidden from the public. Okay? Now, why it is hidden? Because the government doesn't ask him to show his money in public. It's not. It's the law. Okay? That's why it is called private. Well, whenever you go to any store near you or a company or whatever, you can't ask them how much you make, or it's a stupid thing. They would not answer these kind of questions because it's private. Or you go to your friend who has a restaurant or a car dealer, or he has a business, and you ask him how much you make or how much you have, or these questions are private. Most of the time, the people, when this information is private, they don't want to talk about this because it is their business. It's not your business to talk to them. But if you are a partner, yes, you will see everything. But if you are not partner, you will never see. And that's why it is called private. Now, let's go to the next step. This private company, someone has a successful restaurant, but he thinks that he can make other restaurants through the city, not only one restaurant. Suppose he is living in the north. He wants to do a restaurant in the south, or in the west, or in the center, or in the east, because the city is big, and since he is successful, he can carry his success to other stores. But he don't have any money. Okay? He can go to the bank, maybe the bank gives him money, maybe it doesn't. He can ask money for all, but most of the time the companies, what they do, if they want to go bigger and bigger and bigger, and they have lots of money, they should do what? They should go public. And this is this is our subject of today. Going public. What does it mean? It means you should go and file to be a public company. In order to be a public company, you should show them all your information, financial information. And if you are accepted by the stock market exchange, and then they give you a ticker, it means a symbol, and then you will be trading in the market. Okay, this is why it's called public. He said, can they do a private tender offer if they don't want to go public? Yes, there are some many ways. There are small companies that they sell the company when they are young, when it is not even public. Yes, they can sell it. The whole company, they sell it. Especially for those softwares, they are just young people. Okay, especially softwares. Okay, they are young people. They work into a software. Okay, making software by themselves, and it does something, this software, and it become famous because it's just private. And then some other big companies, they acquire these small companies. Okay, they acquire them, even they make money or they don't make money, they acquire them and they give them good money. So for example, someone who is at the university, for example, or college, he just play with his friend with the software, and someone gives him $1 million. Okay, a lot of people, they just sell, but they don't know the value until later, because the other guys, when they buy something, they understand that this could be something big in the future. That's why they buy it. But the guys, they don't know. Well, it doesn't mean they don't know. They know that it is valuable, but $1 million for them, it is too much money. Or 2 million or 5 million or 10 million. Okay, they sell this. There are some companies, they just begin. Even they don't make money, they can, these companies can be sold with so much money. Okay? And you see, if you are following the market, you will see a lot of these kind of things. Okay, buying and selling companies, and in USA it is thousands of companies that are bought and sold. Even big companies are being bought by other bigger companies. So this is not my concern with this session. My concern with this session is to speak about the IPOs and how we can make money from them. There is another question from Vincent. He says, have you traded any stock that got halted? What happened to your stock? So what do you mean, Vincent, that it is halted? I don't understand. I don't understand your question. You mean, for example, if the company goes from public to private? No, I don't see that. Well, where have you seen this? No, I have never seen that. No. Well, which companies are? The government has nothing to do with here. See, Vincent, the company, when the stock is going to a stock market, and the people they trade it, the government has no relation with this business. You know, some usually happens when penny stock. Yes, it happens with penny stock, but there is no rule. There is no rule. They can't. It's since it is in the market, it is bought or stopped. If they stop it, it means there should be something. Either it is bankruptcy, or the company is sold, or the company has opted to go from public to private again. Okay. Trading pose. I have never seen this. Trading pose. I have never seen this. If you, for example, if you have a case when there is a trading pose, you send me the link and I will try to see that. But for me, I have never seen this because I don't see, I don't see the news a lot, and I am not connected a lot with the news. For me, I buy and sell for 8 years right now. Since 2010, I have never seen something that I trade and they say no, you can't buy. I have never seen this. Yeah, but if you have a case, you can send me a link to that problem and I will see this. Because the trading pause is, if it happens, it happens because of the exchange, not of the government. The government has nothing to do with this. Okay, the exchange. If the stock, because we here in America, we are a free market. We don't stop trading. In some other countries, for example, they say, for example, 10% is the maximum stock can go up or down. 10%. There are some countries that have this rule. But I'm telling you, in America, I bought a stock 78, next day is 135. I double my money. So there is no rule here, okay? So there is no rule here. And Vincent and Mr. Handa, if you have a link, I will study it later when we finish this session, okay? Now, let's go and continue our subject. So, as I told you before, why a private company wants to go public? Okay? It wants to go public because it needs a lot of money to make their model spread in all the cities. I just give you the example. It happens with McDonald's before. Okay? It's just the beginning of the restaurant. It was successful, and its model, the people, they like it too much. You go to McDonald's, you will not stay 1 minute or two and your food is ready. Okay? But if you go to another restaurant, you can stay 10 minutes or 15 minutes or 20 minutes waiting for your food. And people, they don't like that. You know, people, they want fast food. They want something very quick. They want to stay in a restaurant. They don't want to stay there. That's why we have this idea of fast food. It is something that it is easy, and it's you go just with your car, you go through, and then you have your food while you are in your car, even you don't go inside. Okay, it's the model of the company, and the executives of that company say, okay, we will have more money, and then we make our model company business spread all over USA. This is what the companies do. Okay, and they know how much they need for each store. Hello, Mohammed Benaba, how are you? Okay, so they know how much they need as money. So the stock market or the exchange help them have what we call virtual shares. Let's say the company has 1 million virtual shares, and the exchange it gives it 99 million shares. They are virtual, they have no value. But when it goes to the stock market, this share, it will have a value. Let's say it will have $10 value. 99 million by 10, you see how much money these guys are coming. So these guys will have a lot of money to be in the stock market. But the thing is, they should file all their information, and this is something crucial for the company. Some companies, they don't want to give you what they make, or how much they make, or what is their future, or what is their intention. But since you go to stock market, you should give all this information quarterly. Each 3 months, you should send the stock market, and you file, and you give new information of the company, what it did in these 3 months. And this is a burden, okay? It should be a lot of work. So you should, because you are having the money of the shareholders. It means people who are strangers, who are just outside in the public, let's say public of USA here, and they are buying your company shares, and the money, where this money goes, okay, it goes to you, okay, it goes to company itself. Now, when the company has billions of dollars or millions of dollars, depending on the company, it begins to spend, to make other stores, to hire managers, to begin to work, and then they begin to make money. And each 3 months, they announce how much money they make, how much money they lose, what do they do, what is their future. It means each 3 months, they give some kind of information. And now, you and I and everybody else can go to the market. We have a symbol, and you can buy whatever shares you like, which is very good, because I or you will be a partner or a shareholder of this company. If you buy, for example, 100 shares of Facebook, you own 100 shares of Facebook. Although it is just a little bit, it's nothing, but you own, and you can vote. They send you a letter, you can vote. It means you have some advantage, okay, because you will become a shareholder, although you don't have that much money. Hello, Anas de la Noche. Bonsoir, comment allez-vous? Okay, so as I told you before, um, the company is there, the company is happy because it is public and it is a big deal. Let's say a company, let's say a small restaurants making 1 million a year, just an example, okay, in your neighborhood or where you live or in your city, you know, a new restaurant, but it's not everywhere, it's just a new restaurant, a private restaurant, a small one. It's not like McDonald's, which is a public company, okay? It's just a small restaurant. Someone owns it, okay? It makes $1 million a year, okay? Now, this company, if in the future it goes to the stock market and it is accepted, it can have billions of dollars in its hands. It means those people who make that small restaurant, they can make hundreds of other restaurants the same as that one. If they are making 1 million, they can make 100 million, 500 million, or $1 billion a year. And this is why going public is so good, and everybody is happy. The investors are happy, the shareholders are happy, the owners of this company are happy, everybody is happy. And this is why America grow good compared to the other models of economy, where the economy is centered to the government. The government does everything, okay? But here in America, the government doesn't interfere into the economy directly, okay? If you are selling pizza, the government doesn't care about what you sell. The only thing it cares is that you make money, you have your workers, they take tax from you, that's it. It means, and you do your job and everyone does his job, and that's why it is easy and it is good for everybody. Okay. Now, when the company get listed, they give her a ticker and it begins the value of the people. Let's say the company started the first day at $10. After a few days, the investors or the traders or anyone, they began to evaluate if if this company, if they think that this company is worth more, they try to buy this company because they think it is undervalued. Undervalued, it means that they think that the company is not, the price is not $10. It should be like $50 or $60 or $60 because the company is doing good and it has a lot of earnings, and they will see after 1 month, 6 months, 1 year, 2 years, 3 years. But the thing is, not all the companies IPOs are doing good, and not all of them will succeed. Okay? Because when the company goes public, it depends who buys the shares. If there are more than mutual funds, they like this company, there will be competition who buys more. Okay? And if there is advertisement, or there is some analyst saying good about this company, or there is TV, especially TV, they show you this company that it is, and if it is good, they will say it is good. If it is bad, they say it's bad. And this will influence the investors and influence the traders. But understand here that in this session, we try to see that there are two kinds of people in these IPOs. It means investors and traders. So investors, most what they do is they like to buy an IPO when it is young. Maybe 1 year, 2 years, 3 years, they can get a lot of money from it, especially when it is a very well-known company or it does good things. Okay, that's why a lot of people they buy, and you see the stock is going up so good the first 6 months or 1 year or two. Now for traders is different. For traders, they follow the trade. If there is option to short the stock, if this IPO is not doing good, and they give them the option to short sell this stock. If it is shortable, it means this company stock have this ability to sell short. So a lot of day traders, they follow this company that is bad. Bad, it means they have bad reviews, or they say this company will not do good in the future or something. That's why you see this company going down. And some people, day traders or short sellers, or even swing traders, they will follow this company down. It means when the stock is going down. Now, if it is making good, the investors come, they buy, and they continue buying. If there are more mutual funds managers, they see that this is a new thing and it can be a good investment for 1 year or two, they will buy this company and they will wait. So everybody is waiting. Okay, it's only time that shows who is the winners and who are the losers. It's time only. Even if you are day traders, it's time. If you are short-term trader, it's time. If you are an investor, it is time always. But time, it is not what makes the company good or bad. It's the direction of the investment. What I mean by direction of the investment, it means, is the stock going up or going down? This is what makes most of the time the money. Understand that there are some IPOs that they lose a lot, and maybe one day they will exit the stock market, okay? Because they can't make it. They can't make it, and their stock is going down and going down and going down until maybe decide that they will exit the trade, exit the stock market and get unlisted. Or sometimes another big company buys these small companies by mergers. Okay, they merge. Another big company buys a small company, and it is a lot of things that it is very, very complex. I don't want to go through that. The main thing I'm explaining here is that sometimes these IPOs, because they are new, a lot of people, they make a lot of money from them. Understand that in the future I will make some videos about these charts. That some companies, they begin, for example, at $10 in January. By December it is $70 or $80. It means if you put 10,000 in January, you will get $80,000 or $90,000 in December. It is a big deal. But sometimes it means the value of your investment, it's not the same, depending on where you are in the market. And you will never know, okay? You will never know. But there are some big companies, they have been in history, they have been so good, but we don't know how many years they will stay doing the same thing, because things change. And as I told you before, that nothing stays in the market the same. It can stay 5 years, 10 years, 20 years, but things can change. So please, do you have any questions before I go to the other topic? Mohammed bin Naba said, tell us about spread. Which spread? Are you speaking about the bid and ask spread? I think I have made videos on YouTube about this. Is it about the bid and the ask? So the bid and the ask is very simple. If you want to buy a stock, you find two prices. You find the bid on the left, you find the ask on the right. The ask is what the market makers ask you to pay. The bid is if you own the stock and you want to sell, you sell it with the bid. That's it. If the volume is low, let's say you want to buy a stock and the stock volume, the daily volume is only 5,000 or 10,000 or 50,000, you find the bid and the ask very wide. I put 12 lessons in my subscription about this. If you are interested to go into details, you can check silver subscription or golden subscription. I have put 12 and how this will affect your trade, because this is a training. I can't. Hello FRDM. This is Mohammed bin Naba. This is training. If you have the subscription, the silver subscription, you will find these 12 lessons about the volume. It is so important to know, because you know it only once. You understand it and that's it. You will never need to ask anyone else, because when I give you these lessons, it explains how it affects your trade. Okay, and it has a very big importance according to what you do, especially when you are trading smaller stocks. It will affect a lot, especially with any stock that it has a low volume. Even if it is a big stock, $100, and if it is just have a volume like $5,000 or $10,000, it will affect when you buy and when you sell. If you are interested, you can just go and check silver subscription, and you go there and you check these volume lessons. They are worth it. Okay. So how are you, FRDM? We are like 42 minutes. Okay, thank you for coming. Now, the thing is, the IPOs, why the people, they get interested, is just because they are brand names. It means names that you know in the market. You go, for example, driving, you know some restaurants, you know some stores, but you know them, but they are not in the market. But one day you find your store, that it is in your city, you find it in the market, in the stock market. You go to that store and you find that the store is doing so good, so well, and you say to yourself, why I don't invest in this company? Because I know. This is how the people think about investing for the long run. Yes, FRDM, you are always late. Me also, I am always late when I come. It's always 11, but I don't come at 11 because of some things about these softwares. So, these people, they see brand names. For example, Facebook, 2012, it is launched as an IPO in May 31st, I guess, if I am sure. Now, before May 31st, 2012, a lot of people, they know Facebook and they use it. But at the time it was small. It's a brand name. It is something new, and the people began to use it. But it becomes, after it becomes an IPO, and it gets maybe billions of dollars into the company, And this company becomes bigger and bigger and bigger and bigger because they need this money to make the company bigger and bigger and bigger. Although they don't have a store, but they have an online presence, and it is a new word that it is created. Okay, like Facebook is a new word, it's a brand name. Everybody right now, whatever happens in the world, you find it there. Okay, the people begin to forget about TVs and movies and the other stuff, because people, they want live things, and Facebook is one of the biggest live in the world. It means you can just have your cell phone and you be live wherever you want. Okay, wherever you want, wherever there is internet, or you can post, you can do whatever you want. So these are brand names. It means something that the people, they know, they recognize even before they go to the stock market. Now, when they go to the stock market, they are very known. They are brand names. And after that, some they succeed, some they don't succeed. Like Twitter, for example, the first 3 months, it was so good. From $45, it goes to $74.74. But after that, it goes down because, analysts were against it. But for me, I'm always positive. Why? It's just because analysts, sometimes they are angry, or they don't like a company, or they don't think that it will make money in the future. But the future, we will never know. If this Twitter will be making a lot of money in the future, it will be the same as Facebook or any good brand name, because right now it is used by everybody. Okay, it is used, and some people, they like it, other people, they don't like it. But like these brand names, the more people like something and they buy this stock, the more it becomes bigger and bigger and bigger. Look, for example, look at Google, for example. Google is a success. It means from the beginning until now, you have many splits. It means the stock goes until 1100, and then they split it into two or thing. It goes to 500, and then it goes back to 1000 just a few days ago, and now it's like 1025. So people who are in, mostly they are millionaires. Mostly they are millionaires because they believe in it from the beginning. When you believe in some company and you put money and you are successful, you just stay and you are getting a lot of money. Hello, Artkov. You are a bit late, Artkov. How are you? And Vincent said, let me drink some coffee. Vincent said, what do you think of traders that turn 5,000 to 100,000 in 1 month? Do you think they are phony or they are really good? Now, see, sometimes people, they don't trade at all. They buy something and by chance it goes. I see some stocks for 2 or 3 months. They were 5 cents and they go, and I find them, they are $5 or $7 because of manipulation. Some people, they can make money, but it is not trading. They do it once and they succeed, and that's it. Okay? So if they want to do it always, they will never. Because if someone is making 5,000 to 100,000, it means he can make 100,000 by 20. He can make $2 billion, and from $2 billion he can make 2 billion, he can make 40 billion dollars. He will become like Warren Buffett in 2 months or 3 months. Do you believe that? So this is not, these are people who go to do the highest risky thing because they don't risk anything. Some people, they have $5,000 or $10,000 or even $20,000 and they are crazy. So their craziness, they want to do what we call gambling. Now this gambling, what is it? Okay, they bet for something and they just put all their money. It's like gambling. Now when you hear, for example, if I tell you something, if someone who spent $2 or $5 in a ticket and by chance he gets 200 million, he can write a book and it will be a bestseller. He said how I was poor and how gambling saved my life and how I know that I will make this money. So they begin to boost. Why? Because they have got the money. Now, since they have got the money, they can speak because they have the money. So you understand the game? So these people, from 5,000 to, not just 5,000 to 100,000, but to 1 million or 2 million or 5 million, they say it, okay? They say it. But some, they trade and they have techniques, they have way of doing business. Some, they just, they just by chance. If you go right now, those who do penny stocks, and they have been for years, there are some people who have made a lot of money, but it's just by chance. Okay, just by chance. But it is not. But there are some people who have done a lot of work and they have traded for a long time and they become famous. Yes, it can happen. But not to everybody, not to just people who just did a trade or two. I told you, someone before sent me an email. He has $1,000. The next day he bought a stock. The next day it doubled. Like it was let's say $1. Next day the stock goes to $2. Okay? Now from $1 to $2 he doubled his money. He sent me an email. He said, Kareem, I have doubled my money into one trade, into just one day. Okay? And then he began to think about millions of dollars. He said to me, what is your strategy? My strategy giving. It means how much should I make in order to reach $1 million very quick? He began to dream like anybody else because he thinks that when he succeeds in one trade, he will succeed the other hundreds of trades in the future. And because he doesn't know, this is just a luck, okay? A luck that comes to anyone. You can just buy today a stock, tomorrow it goes up, it can double, okay? And you can make money and you can say, oh, I am a good trader, but it is not. If you stay years doing the same and you are making money, yes, you are a great trader and you will become a millionaire in the future. This is not something impossible. It is possible, and some people do that. But if you just begin and you make one money here or there by luck, you don't know even what you did, and you think that you are like becoming a great trader and you will be making millions. This is not true. That's why I want just to always to explain how things work in the market. Okay? Vincent, they say no, they show live trade every day. Google Warrior Trading is YouTube. It is verifiable. Warrior Trading in YouTube is doing live trade every day. Okay, If they are warrior trading, try to see if it is not a broker. Okay? Try it's not a broker, and try to see. I'm telling you, try to be careful. Try to see if this stock is not manipulated. So here, I am not going to go and to speak about what other people are doing, but because I am not concerned with these people, they do whatever they want. So if the people, they like them and they can make money, it's okay. If they are teaching and they can make money, they show that they can make money, it's okay. Why not? But I'm telling you, if some people is doing trades with bigger stocks, it means real thing like $50, $100, $200, they can make trades like this. Is good. They can make money. But smaller stocks, they can be manipulated. Okay? He can show you a stock that it is $1. He can manipulate it. Anyone else, he buys 10,000 shares, 20,000 shares, he will be making a good trade and you see it. Okay? He can make that. But these things, I am not worried about these people, what they do. Okay? It means it's people how they do their business. It means I don't be with this kind of people what they do. They do their trading. If they are doing good, just see if these stocks, they are not penny stocks and manipulated. That's it. See the volume. If it is low, the volume is very low, and any movement, anyone who buys it, the stock can go up, and the other is making money. Yes, try to see if it is no manipulation or stuff, because it's not just to say that someone is showing live. Okay. Now, another question. What do you think about Snapchat IPO? The company is popular, but the stock pricing is diving. Yes. Thank you very much, Nas de la Noche. What do you think about Snapchat IPO? The company is popular, but the stock price is diving. Yes, you know, it's a long time I didn't, I'm not following IPOs for true, because I just buy stocks that I need. But I was surprised to see Snapchat, and I see it's going down. I put Snapchat, I put a plan. If it reaches certain criteria in the future, I will buy it, but not now. It's dying, it's going down, and I don't even what's the price right now. I see other companies that I know, and they are doing so good, but these days they go down, which is, for example, Square. This Square things that you use in your cell phone in order to pay. This is a new revolution in the all the people that they don't have stores, they are going just outside services, they use their service. So it was so good, and I find some of my students, they have bought it already before when it was just beginning. Now they have been making money from it. Okay, because they find it. Okay, they find it in the search, and this is the good thing. Whenever you buy a stock, you find it in the search, you buy it, and if it's going good, that's why we are here. We are here just to make money from any stock that moves. Vincent says they buy thousands of shares in a small stock like $4. Yes, it could be. Hello, Till then. How are you? They have scanner and they buy small stock with millions of volume. Yes, I see it. Yes, I see it. I see it. I have some of my students, Vincent. I have some of my students who bought it, and someone has sent me the trade before this before diving. And I told him always try, always, never forget about the exit plan. It means where you want to exit. Always put this stop loss. At least if the stock goes down, you exit safely with a lot of your profits. Because sometimes things go well and then things go bad. That's why I told you always, time is not always your friend. Sometimes it's the direction of the stock that it is your friend. It means if you are okay with the stock and you are right, you can make a lot of money. Oh, you have been there also? For me, I missed that. I missed that because I were in other stocks. Okay, I were in other stocks and I didn't check it. Okay, it doesn't come to my to my scan when I scanned. I don't scan that much because if my stocks are doing good, I don't usually go to search for stocks. But it is a good thing, as I told you. It means the bubble. Let me see this square. Yes. Now it is square is 38. It goes to 49. 49, and let's see the stock where it was. The stock was 9 in July, in May 17, 2016. Okay, let's say in 1 year and a half, from 9 to 49, it's a big money. Okay, yeah, it's very good. It's excellent. It's excellent. A lot of people, they discover like these stocks, but if you discover them and you can make a lot of money of them, and if you put always the exit plan, it will be always very helpful for you, and you can exit on time. Hi Tubal Kane, I am late. Sabah al khair صديقي. Thank you very much, Tubal. How are you? We begin at 11 p.m. Eastern Time, always. Vincent said, recently I uploaded my trade to a website that do analyze of my trade. I am right 70% and wrong 30%. I did 80 trades so far, so I need to work on my average winner versus losers, my average losers. Hey Vincent, what did I tell you about these winners and losers? You are still keeping saying things that I don't like to hear. Okay? So for me, I don't believe in the winners and losers you are speaking about. Winners and losers are numbers, okay? But it tells nothing about your money, okay? If, for example, I say to you, I have made 70 trades that are good and 3 that are bad. You tell me, I have made 70 trades good and 30 trades are bad, the same as me. But do you think the money is the same? No, I'm not speaking the money, your account and my account. No, I'm speaking, let's say we have the same account. Do you think that we are the same? I'm telling you, no. We will never be the same. Okay? Because I told you, if you make $1 in this trade, it's called winner. And it is not a winner. Okay? You put $10,000 $1,000, you trade, you stay 1 week or two, the stock goes up, then it goes down, and then you exit, and you exit with $1 profit. This is called a winner, but for me it is not a winner because you did not make that much money that we need to be a short-term trader. That's why this idea of winners and losers, for me it is false. Okay? And you say is bigger than my average loser, I need to work to tighter stop loss. It is you think, okay? You think that maybe the stop loss is the reason, but you don't think about when you exit is the mistake. Okay? You don't think when you buy it is the mistake. So there are most of the time there are three variables. The entry, where you enter, is it good or bad? Your stop loss, and how to follow the trend. These are the three things that you should look for. It's not only one thing. And stop, as I told you, Vincent, you will, let's say what he says, because I don't know. My point is my average winner need to be bigger than my average loser. No, it is false. Vincent, you are false. You did not check training level 5. I told you always go to training level 5, study it. If you don't understand, send me an email and we'll go through this. You are mistaken and you are still convinced that you are right. According to what I teach, what you are thinking is false. It is not the number of winners that makes your success. Okay? I'm just trying to repeat it many times. If you still are confused about this, you are still going to other websites to tell you what is good, what is bad. They don't know my strategy. They will never know what I am doing. They have no idea how my work is. They believe, as the other stupid people believe, in the books and in online. That's why most of the beginners, they can't make it like this. You can't make it when you think that the winners should be more than the... Okay? I can make 30% winners, 70% losers, and I still make money. That's why I told you, you should go to training level 5, how to make money from stocks, and I will show you that your winner and versus losers is not true. It is false idea. It's just a concept that it is false. But people, they follow it. Know why? Because all the people think it is, and all the people think that way. Okay, that's why it's not true. For example, if my average winner is 50, but my average loser is 100, then I am not a good trader. No, because you are looking for numbers. These numbers of winners and losers are false. So I'm not going to stay talking about this, Vincent. I'm telling you, try to go to training. I think you have it. I don't know if you have it. Okay. Try to go to training level 5. If you have the golden subscription, you will find it. And this is my email. So send me an email. And if you have the training, you study it again before you email me, and then we can get a discussion about this. because this discussion, um, I have explained in training level 5 into details, and I will give you the proof that whatever you say about these numbers are false. From where do you get this idea? Because you are getting this idea from beginners all over the world. They have this idea. Thank you very much, Mr. Handa. Oh, yes, yes, yes. Okay, okay. Vincent, since you have training level 5, just go through it, study it again, check the winners and losers, see what is the mistake, and then if you don't know, send me an email and we can discuss it offline. This could be better because it needs time, and we are here just to speak about IPOs today. Okay, thank you very much, Vincent, and I wish that you change your idea, because if you continue having this idea, it will be a problem for you in the future. Even if you make money from my strategy, but you will never understand what I am doing, and this is the heart of the thing. If you don't know how to make money from the market because of this concept that I have, you will be doing the same as others, and then you will lose money, although you have winners, more winners than losers, but you still don't make money, and you might lose money also. Okay, it's complicated, but it is not. If you study right, you will understand the idea, and when you understand the concept, you do what? You try to erase, delete from your head this idea of winners and losers. Try to change it with my concept. Everything will be clear for you. You don't worry how many losers you have. You don't. Because at that time, when you begin making money, losers and winners, it becomes just history. Okay? For me, I don't. I always trade the same from since 2010 or 11, the same thing, and I'm still each year making money without any problem. It's just because my ideas, the concept that I have. It's not because I make 75 or 80% like the other people, what they do online, and they say, oh, okay, I'm always better than the market, and I know what is the future of the market. Okay, so this is for beginners. When somebody wants to show off and to say, he begins to say, oh, all what I have are winners and I don't have losers, because the beginners, they don't understand really how do they make the money. They think that because you make $1 in this winner, you will be making money in the future. Okay, so thank you very much, Vincent, for all these questions. Let's go together and we see. Yes. You are explaining strong, maybe, but from where what I have read from you explained very well. Okay, and you say I uploaded the trade to a website that do analyze my trade. How this website analyze your trade? What is the criteria? It means, how do they know that your trade, if you put one trade, okay, you put one trade, it means, are you telling me you are uploading your trades into another website? For what reason? Okay, it means you are uploading your trades into this, and on my average winners versus average loser, my average loser. Okay, send me an email, it will be there, and we can do this online. Okay. Oh, okay. So please, Vincent, please send me an email. send me an email and send me this and explain to me this website, which is this website. At least I will take a look and I will check what is it, or how it analyzed the thing. Okay, now how to trade IPOs. According to what I do, there are two ways to buy this IPOs. Either from what we call support line or resistance line. Resistance line, there are a lot and they are changing. Support line, most of the time, the biggest one is when the stock is diving. From the beginning, it is diving, it doesn't do nothing. And then one day it stops and then it's going up. This is what we call support line, which is the lowest in history. Sometimes the stock just begin 1 month or two. It's going down, 1 month, 2 months, 6 months. And then you see that it stops and it's going up. So that moment is the momentum to buy and to wait. Because this is a very difficult trade. It's not easy. And most of the people who succeed are professional traders. It means traders who follow stocks for true and see opportunities, and when they buy, they keep tight, they hold, and they know when they exit if things goes wrong. It means there is a price to pay. Always when you put stop loss, there is a price to pay if you are wrong. But if the stock goes back to the support line and goes down, you sell. This is how I trade. When there is a danger and you lost money and you see that you will be losing money in the future because what you see here, what does it mean? It means that you should exit the trade and watch it for future weeks or months. If you like the company, or it is a brand name, or you think that just bad news comes to this company, or they downgrade this company or something like that by some analysts or some big brokers, so you should be alert to risk. Here, when I'm talking here, I'm talking about short-term trading, or what we call swing trading. We follow trends. Okay? If a stock stops going down and begin to go up, and we see a trend, that is our gold mine. That is the gold mine. That is where we can make a lot of money from it. Okay? But this is a difficult thing. The trading that works with this, let's say I write it here, it's training level 13. Okay? Training level 13, which is how to buy from support line, is very difficult. I'm telling you, it is for advanced students. It's not for easy, because if you spot this as a support line and then you buy, you should follow the stocks daily. Okay? And you put your stop loss where you want to exit, and you should be okay with your what you call your risk. You should be okay, and you do it for once for this stock. If you succeed, you can make a lot of money, because the trend will not stay for 1 week or two. It can go 1 month, 5 months, 6 months, 8 months. Even it goes to 9 months or 1 year. It can. I have seen stocks like this. Okay? And when you see the money, you will never believe how much money you can make from this stock. But understand that it is risky, and it's not each time you find a support line that it is the right one. Okay? Sometimes it is not. Now, let's answer a question before I continue. Till then said, what do you do when the sudden dive is lower than the stop loss? Oh, it means you have a gap down. It means there is a sudden drop in the price, and there is what you call a gap down. So since it is your stop loss, you exit at that price because you can do nothing. You can do nothing to change that. The only thing you can do is, if you see earning date and you don't like to be there, you should exit before the earning date news. This is the only thing you can do. But sometimes you exit the trade and there is a gap up. It means you will be making a lot of money from it. So it depends on your risk. So till, oh yes, you say it's a gap down. There is no solution for that. Okay? There is no solution. The only solution is if your broker is giving you the earning date into the into your platform when you see the stock. For example, you own the stock. For example, my broker, if the stock has an earning date, it put something in it in the stock, like a star or something like that. And when I click it, it says there is, for example, an earning date after the market close or before the market close or during the day, or if there is no specific time of the day, it shows you just the day. It says this is the day where there is the earning date. For me, I know. If I am scared, for me, I have never been scared in my life. Whenever is earning date, I'm happy. I say, okay, I go with it. Because in my life as a trader, I have seen hundreds of gap ups. And this is a bonus for the market. Yes, I have some which are like gap downs. Yes, it's true. I can't avoid that. But, it's part of the game. You should be courageous to accept the risk. But if you don't like earning dates, you don't like to have up or down, you just want a normal trading, here, before you buy the stock, you should see the earning date. And I'm telling you another thing. Earning dates, it's not that all the stocks will expand with a gap up or gap down. There are some stocks that have earning dates, because earning date, what is it? Each 3 months, the company file a statement about the quarter. It says what the company is doing in this quarter compared to the other quarter of last year. Okay, if they are making more money or they are making less money or whatever. If the news most of the time is good, a lot of traders, they come and they buy the stock after the market close. They buy it. Or before the market close, they buy it a lot. That's why you see a gap down when it's going down or gap up when it's going up. Now for you, what is the solution? Try to see the earning date when. If it is near, you can sell your stock and then buy it after. But the problem, if it is a gap down, when you buy a gap down, most of the time, maybe the stock is continuing to go down. If you buy a gap up, it's always pricey and it is more expensive. So you have one thing to do. Either sell or take the risk. And hope till you understand what I'm saying. There is no other thing you can do. Hello, Lighthouse Show. How are you? Hey, everyone. I am watching from Mauritius. It's Sunday morning, 9:22. Thank you very much, Lighthouse Show. Mauritius, I don't know even where is this country or this place. Although it looks that I heard about this, but you are welcome. Okay, let's see. Oh, you are near Africa. Oh, okay, okay. I'm sorry. I thought it was in America here. I see Mauritius, I see Reunion, and I see Madagascar. So you are there. Oh yes, that's good. It's good. Thank you very much for coming and for watching this this live. Thank you very much. Yes, yes, I check it. Do you Lighthouse show? Do you speak English or French or Indian? What's the language there? Because I see that it is near Africa and it is near Reunion, so I don't know what language do you speak or something. Okay, so as I told you before, um, these IPOs, a lot of traders they see an opportunity to make money because these stocks are volatile and there is what we call a bubble. It means if people they hear something good about these companies, they can just go and buy this buy these companies because of the news. They say good about it. Some they don't even know what's going on. They just try to buy and wait for and wait to see something. Sorry, guys, there is a like I see there is a stop for the video. I don't know which the internet is. It looks good, so I don't know what's the problem. So the video information is just little, and hope you are. Are you still listening to me, guys? Let me put it this. Oh, hello, Rikoshi and City. Because I see that the video is going so bad and the output is not good. So if you don't it is good now. Okay, for me until now. Yes, okay. Oh, okay, it becomes right now, it becomes good. I see it is green and it's everything this is a funny thing. Thank you very much. Thank you. Believe it or not, when I am driving, when I see a green light, okay, when I'm driving, I am always happy because I think that my stocks are going up. But when I see red, oh, it says stop. Oh, okay, my stocks are going down. So it's always the same with this light. Okay, thank you very much. So as I told you before, it's what I say is a bubble. It means sometimes the mood of the market. Thank you, Tobal Kane. Oh, you are living in Riyadh, in Saudi Arabia. Oh, welcome, man, welcome. Thank you very much, Tobal, for listening. Our official language is English, but we have Creole languages very close to French. The island was colonized by both France and England. We have also people who speak Hindi. Great show. Thank you very much, Lighthouse Show. Do you have a small market there, a stock market in your small island, or do you buy or sell other stocks elsewhere? So, as I told you, there is the mood of the market. Sometimes people who are watching too much TV, they get influenced by IPOs, and they say, "Oh, the IPOs begins good, begins good." They just jump and buy. Okay, they have some money in their account. They are just, because they don't know how to trade, and they are not really wanting to know how to trade. They want just if someone helps them, give them a word or give them a stock, and they buy and they make money, and that's what they want to do in their life. This is like a lazy type of traders and investors. Also, there are a lot of that are lazy. They don't want to see anything. They want just a website or a guru or someone else or a newsletter, and they give them the websites, the companies they want to buy, and that's it. But this is not what I am doing here. For me, I'm doing here to make people aware of what they are doing, to be an independent trader, like a short-term trader. Even if you want to be an investor, you should know what you are doing, and you should know your risk, and don't tell after 10 years or 20 years, "I don't know." Okay? You should know beforehand what you are doing. Okay? And because people, they do a lot of things. They do a lot of things as an investment, but they don't know about it. For example, people who are using 401k here in USA, they are investing in the market, and when you ask them about the market, they say, "Oh, the market is scams. They are manipulators. Oh, Wall Street take the money of everybody." But you see them doing a 401k, and they put their money in stock market. So you see that the people, they don't understand anything in this life. It means in business. Okay, so it's very hard. So these people should wake up and they should see where the money is gone. Even when they invest in 401k, understand that the managers, they put your money wherever they want. If you don't go there and check, they put it wherever they want. And let's see, Lighthouse shows, he says, yes, in Mauritius, we have a stock market which is one of the best in Africa, but it is not very volatile like in the way. Yes, it's so good. It's so good. So how many companies or stocks do you have there? You can send me the link later. I can check. Yes, thank you very much. Thank you. I know the north. You have Middle East. You have a lot of stock markets that are so strong, so big there. But I am just curious to know. Your island is very small, but it has a stock market which is very good, which is very, very good as a country. And as I told you about these IPOs, they come each week, each day, each month in each year. In this year, I think I have checked, there is about, from January, there is about 334 IPO. It means 334 companies, they joined the stock market. Okay, they joined the stock market and they are trading right now. 334, some they succeed, they become very known and they succeed, they make too much money. Others, they are just trending into a range, but some they go down. So understand that there is a big risk also of buying this IPO. So anything, it's not anything granted. Anything has a risk. Whenever you put money in the market, you are at risk of losing, or you will be making money. Okay, so two options when you put your money. You can't stop the stock when it's going up. When it's making money, you can stop it, and you can't stop it when it's going down. It's it's the market who decide. And you ask yourself, who is the market? The market is everybody who participates in the market. There are big hands like mutual funds, managers, hedge funds, banks, big brokers, customers, and pension plans, insurance, anyone who is interested and buy heavily. These are the big guys. Now, there are the millions of small traders and investors like us. We are small compared to the billions of dollars that they have. So we change things, because when we have 1 million guy goes and buy Facebook, in that day the Facebook will go up because we have a lot of people are buying. Okay, so we are a force, a public force that change the market, and the market is always changing. There is nothing stayed the same. But some IPOs become very famous, like Facebook, like Google before, like Apple, even like a credit card like MasterCard. Okay, it's one of the best credit cards. You know, it is successful. You find a lot of success in every sector and every industry in the market. Okay, some they just succeed. LinkedIn, for example, it is a success. You find other in food, other in banks, in credit cards, in airplanes. Wherever you go, you find some IPOs that did good in the past. No place like NYC. How long does it take to learn your method of trading? It's up to you. It's up to you. It means if you take the subscription, golden subscription, that's an example, okay? Okay, if you take the golden subscription, you will have 10 training for free, and this is the basics, and you have a search each week. It means you have everything you need to trade swing trading, which is short-term trading. Now you tell me how long. It depends on you. So if you are studying very fast and you are practicing, okay, your level will be changing very quick. But if you don't study that well, or in 1 month you study one day, 1 hour or 2 or 3, it depends on you. And you need also, when you are learning, you should practice. Yes. A lot of my students, they send me their trades. I don't even know about this. For example, they send me a trade with Square. Now it is going down for like 1 week, but before it was going so good. Now students depends on their ability to practice and to continue trading. Okay, so it doesn't depend. If you have a lot of students, depending on them, each one is different. Maybe someone is doing good, but he has no money. Someone who is working very little, but he has a lot of money. So it depends on the students. Okay, so the main thing is you look at yourself, how far you can go with the training, and this no one knows. It's you only, and it's not something that you as someone tells me how much is your strategy doing or percentage. This is not a good question to ask. The good question is how far you can go with training and how far you can go with practice. Have you money, yes or no? This is the major things you can think about. And then when you begin to practice, whenever you have a question, you send me a question, I make videos and I explain. This is the best thing that you can have in my subscription. Or if you don't want subscription, you can just order like trainings one by one without going to any subscription. Training level 1 is for free. Hello, hello, incredible product. You come late today. What did happen? So training level 1 is for free. You can get it. It's videos, 28 videos. You can watch them. If you feel you like the thing, you can just go to subscription or order. If you don't like the subscription, so you can order by whatever training you like. And incredible product says percentage means nothing. You could lose 70% of your trades and still make money. Um, 70% of your trades and still make money. Now, for me, I always, when I speak about money, I don't speak about winners versus losers. Always. There is no such thing for me. This is what I teach. There is no winners versus losers. There is another thing. There is, are you making money? Yes or no. That's the main thing. Because percentage change, but making money and losing money doesn't change. If I ask you, are you making money? Yes or no? If you say yes, it means yes. If it is no, it is no. But if I tell you, what is your percentage? Oh, you say, I have 70 winners. But this doesn't mean that you are making money. It could be with 70% you are losing money. Why? Because this doesn't show me nothing. Okay? Until I see how do you trade and how you carry out your trades. Okay? Let me drink some coffee and then we continue to the next step. Okay? So as I told you before, that IPOs are like any other stocks, but the most important thing, there is this psychological phenomenon, or what we call the mood of the market, the news. Sometimes in the market they advertise for this IPO. Okay? They advertise a lot, and you will see that in the chart. Okay? Some IPOs, they are good. They come in a bull market and they succeed, and a lot of analysts, they say, oh, just buy, it is a brand new company, it is good, and they give good opinion about this company. So a lot of people, they don't want to think that much. They just buy what they ask them to buy. But for traders also, you should always check always the price. Where is the price? Okay? It's not just you buy without looking at the price, because for us, if we don't see some signs of good things, okay, some criteria, some signal, we are not buying. I don't buy because someone, an analyst say it is a good company. I will never buy like that, because I am not an investor and I don't follow analysts. Okay? So Incredible Product says, how much money should you have in the trading account to get offered to an IPO days before you go public? Oh, you are speaking about some brokers. I don't know. You should, incredible product. This question you should ask maybe to a broker, and you should ask him if they offer IPOs sale before going public, because this is a private. Big brokers, they sell shares, they get a big quota. It means big number of shares from the company, and the broker will sell this to its customers. But customers, I don't know how much money they have, because they don't want to, believe it or not, they don't want to sell by 100 shares or 200 shares. It's not a big deal, because they do a lot of transactions and they don't get that much money. So they need some people who have money. So either you should ask them if they have in their inventory, if they have some IPOs that will be launched in the future, or if you are interested in one, you should ask. Okay? This is the main thing. For me, I have never been interested to buy blindly before, because you would never know. Maybe they sell it for you for 10, and when it opens with 8 or 7 or 6. So I don't play this game. I don't play this game to buy without the market, because when you buy without the market, you will never know the true value of the thing. Okay? Go to eBay, for example. If you put something, whatever price you put, you think that this will be worth something. But if you find no one is buying from you, understand that the people think that what you are selling is not worth it. But if you put it cheap, the people will pay more because they know the value. Okay? So understand that this is a game of the market. It's a free market. But buying before doesn't guarantee that you are making money. Maybe you lose a lot of money. Okay? Thank you very much, Incredible. For example, if you could get into Alibaba before IPO for a few dollars. But see, incredible product. I have bought Alibaba in the first day. I got like $900 or something in the first half an hour or something. But understand that Alibaba was going down. I think from 110 it goes to 85 or 80 or 70, or I don't know. So if you bought at that time and after a few days it goes down, so you will be losing a lot of money. And maybe there are rules. Let's say, for example, you can't sell after 3 months or 6 months. There are rules if you buy before. If you buy in the market, you can sell in the market. No one will ask you to do anything. But if you buy before, there are rules. You should ask your broker, what are these rules? For me, I know it's like 3 months to 6 months. You can't sell. And what if you buy and the stock will be diving? What you should do? You can do nothing. Your money is locked by the exchange. You can do nothing. And that's why I don't like that. I like to be free. Credible product. If you think about me, I like freedom. I like the market. If I like something, I buy it. If I don't like it, I don't buy it. And I have the freedom to exit at whatever time I like. Now, if you buy before the market, the IPO, you have a price that it is not really true. Okay? So you might make money and you might lose money. This is what I'm saying in, yes, per share. But incredible product, you say you will be making more when the market opens. But I tell you, there are rules. If you buy before the market, there are rules. Maybe they don't let you sell until you have 3 months or 6 months of trading. What can you do later? Let's say if you buy let's say you buy $100 a share and it opens at 110. You are making $1,000 for each 100 shares. But they will not let you sell. Let's say after 3 months it's going to be 75 or 80. You can sell at that time. But you have already lost 25% of your money. So you understand what I'm saying? So never buy before you ask about the rules. Okay? I don't know the rules. That's why I ask you to ask. Even if you get an opportunity, they say to you, oh, you buy this IPO with $1 or 50 cents, buy 10,000 shares or 5,000 shares, and you think you are doing a good deal. You should ask about the rules. This is what I am saying, incredible product. Yes, but see, you should ask your broker first if it has this ability to sell IPOs shares before they go to launch. And another thing, ask them what are the rules. Don't play this game without knowing the rules. That's why I told you. For me, it is a no-no. I don't buy in the black market. I am not a guy who will risk my money in the black market. No. For me, I want to see the free market. Okay, free market. It means if things go good, the stock is going up, I will be making money. If it's going down, I exit on time. Okay, I don't want to be like trapped into locking my money into an investment. I don't want that. Thank you very much, Incredible, for all your questions. Oh, Lighthouse Show, you say, how can we know about a new IPO as they get public in the market? So, since you are in another country, for us here, it is the exchange. And there are websites. So for you, for example, you should go to your stock market exchange and see where you can find information. If you don't find information, you should speak to your broker. Ask your broker because he knows. If there is a website or there is a list of government thing that shows, you will be okay to know about it because this is a public information. Here in America, we know every stock. You go to any website, it shows you what are the stocks that are coming in the future, what are the stocks that are trading, and even the old IPOs. Old IPOs here, like for example, we have Google, we have Facebook, we have Apple, we have Twitter, all the stocks that are in the past. But now, this year we have about 334 stocks, IPOs that have been that are now in the market. It's launched. Okay, so Lighthouse Show, you should just check your broker where you open your account, or check the website of your stock market exchange. There should be information if they supply this information. Okay, because they should make it public, because the people, they want to trade, they want to buy, to sell, to do whatever things. So it could be an easily information for you, Lighthouse Show. Okay, now for investing, there are a lot of people who invest in the long run. Okay, maybe they know this company before and they are excited. Maybe your company, it's the company that you are working in, a restaurant or a store selling clothes or selling food or selling software, whatever it is. Since you are working in this company and you go to the stock market, you can buy if you think that your company is good. Okay, this is a way to do business. And some companies, they will let you even buy from themselves. It means from inside. They will let you buy shares from this company. Okay, so understand that this is the way to do, and investors are different from traders, and each one of them have his own way to do business. So for us, we are short-term traders. We don't invest for the long run, and we just follow trends. When the stock is active, it's going up. There is a mutual fund behind it, or there are big buyers behind it. So we follow them. When they want to get rid of the stock or the company they want to sell, we exit with them, and that's it. And this is what we do, and this is how we make our money for years. So please, guys, if you have more questions, we are at the end of the session. If you have more questions about these IPOs, as I told you, if you go and just Google IPO calendar, here in the USA, let me write this for you guys. If you put IPO calendar in Google, you can find a lot of websites. And if you go, for example, to Nasdaq.com, just an example, you can find all the information that you need, or you can go to the other exchange, New York Exchange, or whatever websites, Bloomberg or Market Watch, or any other website. It will supply to you the information. If you want to follow this kind of stocks, you can put them into a list and you can follow them. But you know they are. Try just to see the most known ones, those that are famous. Forget about this small that these companies that are not famous, because there are a lot. You can't monitor all this. Now, if you use my strategies, yes, I forgot this, which is so important. I forgot it. From my stock screener, those who have my subscriptions, either silver or golden, okay, I might do a search next week. Not this week. This week it's finished. Maybe next week I do with IPO, and I will show you how to find IPOs according to my strategy. Maybe you get interested to buy them. They are very volatile. You can make a lot of money from them, but they are also risky. Okay, so you should be okay with risk. And you can find all the prices. You can find $20, $10, $5, $1, $70, $100. You can find all kind of prices, because some IPOs are big IPOs. Like, for example, Alibaba. Alibaba, when it starts, I think it starts with 100 something, 108 or 110 the first day. So it is a big IPO, a big company. But some companies, they begin with $10, $5, $2, you know, when they are small companies, just small companies, okay? So, how to search for them according to my criteria, I will make, next week, if God wills, I will make a search using IPO only, not the other stocks. I will just show you from the stock screener. It's very easy, very simple. You can put them into a list, and you can buy whatever you want at that day when you search. If you are interested only to trade IPOs the whole life, it's okay also, because sometimes you find gold nuggets, as they say, and they will be so good for you. Okay? But understand, for me, when there is a bubble, when there is a lot of talk about something, sometimes it has a good effects on the stocks, and they go so good because of this bubble, because of this people they speak, TV, forums, the chat rooms, oh, everybody is speaking about something, and a lot of people they buy, and then you see these stocks going up. Okay, so thank you very much. Please, we are at the end of this session. If you have more questions, you can ask right now. I have my email and my website if you are interested to check again, for those who have never seen my website or my training or my subscriptions. If you have a question like Vincent, you should send me an email and we should finish our discussion about the winners versus losers, and they say it is a false concept. I have another concept in training level 5 and it is better, and you will see by proof that it is better than what you think of. Okay, so thank you very much. I'm just hoping that you have another question before it's 2 hours right now, and most of the time 2 hours I will stop the session, since I finished this topic. And if you have more questions, you can just send me an email in the future, or any other kind, or if you like other kind of topics, I will be willing to talk about it and to give you more information about it. Okay, and for you Lighthouse show, as I told you, I will check your yes till then it's every Saturday. I don't know, I have done it now, it is 34. Okay, let's see here. Okay, it is Saturday at 11 p.m. Eastern time. Okay, it's Saturdays 11 p.m. Saturday Eastern time, like New York time, or I always do it. If you have questions, I can ask and I can answer live, but it is just general subjects that they speak about. Salam Hafiz Baishi, salam brother, I want to trade options. Now here I'm trying to always to do stocks, but Hafiz, if you are interested, you can see my website. I think let's say here training. Let's see here. Okay, please, Hafiz, you can good night, wise man. So training level 14 about options. This is the link if you want to check it directly. Okay, this is for Hafiz Bouaishi. This is, I have only one training about options. It's the basics, you will understand everything. If you use my strategy, like training level 2, how to search for stocks. If you find the stocks, you can use these stocks and buy options. This is how to use options on my search for stocks, because understand that an option is based on a stock asset. It relies on it. If the stock goes up, your option is going up. If your option is going down, it means that the stock is going down. So you can check training level 2 or level 3. It shows you level 2 or 3, and you choose the stocks from them, and then go to the chain, to the option chain, go to the option chain of that stock, and you can buy these options, which is very, very easy. It means it is as if you buy the stock. It's the same. If the stock is going up, your option will be going up. But understand that options are for more advanced students. That's why I don't like that beginners go to do options at the beginning. Okay, I know that some people, they don't have money to begin stocks because they have only $1,000, $2,000, $5,000, which is not big money to buy stocks. But the problem is that option, you are doing a 100% risk. This is option. If you don't know, what is it? When you Hafiz, when you buy a contract, this money that you buy, you can lose it all, because you are buying premium and you are buying time. You are buying things that in stock we don't buy. We don't buy time in stock. For example, if I buy a stock today, I stay with it 1 year, I don't pay anything. But you are buying time also. Okay? You are buying time to stay 1 month or 15 days or 5 months or 6 months or 1 year. So you are paying for that. But for us in the stocks, we don't pay. And your money, it goes quicker down, so you are risking more than in stocks. That's why, for me, my new students, I ask them never to do options until they finish my training and they make money from stocks. When you make money from stocks, you can go and do currency, or you do options, or you do futures if you want to, okay? But it is so risky. So that's my opinion. That's why I don't want to talk about options in my thing, because it is so risky. I don't want my students to risk all their money when they begin trading. At least you have stop loss. You can exit at any time. But in options, if you buy a lot of options contracts and there is a gap down, it means a bad day in the market. Believe me, you will lose all your money in 1 day. And this will be bad. Always bad. Okay? So please, Wiseman, it says good night, Kareem, and everybody else. Thank you very much, Wiseman. And thank you everybody here who has been here. But I'm telling you that that I do this session. Okay, I do this session each week. Okay. I do this session. Sorry for the problem with the thing. I do this session. Thank you, Rikoshi and Sisiti. Thank you, Hafiz Bouaishi. Thank you very much for asking the questions. And as I told you before, this is my email and this is my website. If you have any question or you forgot to ask, or something else, you can send me an email, and I will be answering you on time. Okay, so if you don't have any kind of question about IPO, shukran. Thank you, Tobal. Thank you, Tobal Kane, for your for attending with us. I have taught some people from Kuwait and I think Saudi Arabia and Bahrain and Dubai before, and it means in the Middle East, in Egypt also, and other countries. Those that they have stock market and they are open to buy and sell shares. Some other countries, they don't have stock market, or it is so small they can't do it, and they can't even buy or order training or something like that. Okay. So thank you very much, everybody, and see you next week if God wills, and hope everything is fine with you in this weekend. Have a nice weekend, and thank you very much.